Hey everybody, and welcome to the channel for more amazing company and stock analysis. Just know that I am not a financial advisor and that this video is for entertainment purposes only. With that said, don't forget to like this video and subscribe for more fundamental and technical analysis on the most trending stocks. Now, let's get on with the video. Alright, so I'm going to go over the fundamental analysis first for NIO before heading into the technical analysis and some of the news and some of the latest findings. First, again, the fundamental analysis, I'm going to go use their first quarter 2021 financial results for the company NIO. First thing I really wanted to point out was the heavy increase in numbers for the number of deliveries done for the company. Considering this from an annual basis, if you look at this, the numbers have been increasing, not just barely enough, but heavily increasing. What do I mean? For example, from 2019 Q2, about a 7,000 increase. From 2019 Q3 to 2020 Q3, 8,000 increase, and on and on. What really caught my eye was the 2020 Q1 and the 2019 Q4, where the number of deliveries heavily decreased in value. However, after or during the pandemic, the value seemed to go up from 10,000 to 12,000 to 17,000 to 20,000. And so the company picked itself back up with the number of deliveries. And the more deliveries there are, the higher the number of vehicle sales, which we are able to find in their financial highlights. Obviously, green is good and red is bad. The vehicle sales have increased with huge numbers like 489.8% from the first quarter and even 20% from the fourth quarter of 2020. And this continues all the way down. What really caught my eye for this company was the net loss attributable to NIO's ordinary shareholders. In this quarter, it was 875 million in the first quarter of 2021, representing an increase of 188.0% from the first quarter of 2020 and an increase of 226.7% from the fourth quarter of 2020. So their losses are increasing and they're more attributable to the NIO's ordinary shareholders. This is the visual table chart they have to show for this. All this other stuff, such as the vehicle sales, vehicle margin, total revenues, this has all been green. And I highlighted every number to, as I was annotating, to see if it was progressing better from the previous quarter. So for example, from 2020 Q1 to 2020 Q4, an increase of about 5,000. From that number to 2021 Q1, an increase, and on and on. It even went from a negative margin to an extremely powerful positive margin. And on, what really caught my eye was the net loss they faced in this quarter. From 2021 to Q1, the net loss decreased, which is good, but from this number in millions to here, it increased by about 4 times as much. That is pretty scary for the company, and it might be hindering other shareholders from investing into this company. Outside of that, not much bad was found. Considering the CEO and CFO comments, they had a new quarterly delivery record of 20,000 vehicles in the first quarter, 422.7 increase year over year, which is pretty astounding. Now, the company seems to move on and they seem to want to accelerate their research and development in new products like technologies, right, as stated over here. And what do I mean by that? They're trying to implement these power swap stations, which could significantly boost the service capacity of each station to maximum 312 times per day by shortening the battery swapping time to under 3 minutes. So like this, they want to invest in themselves in new products and core technologies, as well as in their service and power network expansion, particularly battery swapping and charging facilities. With that said, their research and development expenses can be expected for it to go up, and that's exactly what happened, representing an increase of 31.4% from the first quarter of 2020. However, they had a decrease in comparison to the fourth quarter of 2020 by 17.2%. The reasoning for that is the increase of research and development expenses over the first quarter of 2020 was mainly attributed to less research and development activities in the first quarter of 2020. due to COVID-19 in China. The decrease in research and development expenses over the fourth quarter of 2020 reflected fluctuations due to different design and development stages of new products and core technologies. That said, while the operating expenses for research and development might have increased of 31.4% from the first quarter of 2020, they haven't had as much loss from operations in comparison. For example, to take here, representing a decrease of 81.2% from the first quarter of 2020 and a decrease of 68.2% from the fourth quarter of 2020. This means that although their research is expanding, they are not losing more in operations in comparison to the previous quarters, which is absolutely fantastic for the company to pursue while investing in their technologies. With that said, for their business outlook, they are looking for the second quarter of 2021 for the number of deliveries to be between 21,000 and 22,000. So an increase of about 103 to 113% from the same quarter of 2020. At the same time, they also expect for their total revenues, based on the increase in deliveries of their sales and other sales, an increase of approximately 2.1% to 6.5% from the first quarter of 2021. In this article, both NIO and XPeng announced record high deliveries for June and Q2. We could see, if we scroll down here, that NIO reports record deliveries. For the second quarter of 2021, NIO reports that it delivered 21,896 vehicles, which exactly they predicted in their Q1 financial report by saying that they predict to sell between 21,000 and 22,000 vehicles, which they did, and it also represents a new quarterly record, representing an increase of 111.9% year over year. As of June 30th, 2021, NIO's cumulative deliveries of its 3 available EVs have reached 117,597 deliveries. That's the number of deliveries they've done in total throughout their entire company. That overall concludes my fundamental analysis. Now I want to head into some of the technical analysis. Right now, NIO has taken a toll. From July 1st to July 2nd, it dropped a lot. Right now, it's in that dip, and if whatever the company's been saying, and if the total number of deliveries and sales continue to increase, and in competition against Li and XPeng, this company fundamentally is going to bounce back up. If you see the dip, it's slowly trying to recover and come back up, but it's still below this SMA 180 line, meaning that it's not 100% sure if the stock is going to go up or down. At the same time, basically what this SMA line is if the stock goes above it and there's confirmation, and if the share price bounces on that line and then spikes up, it's a buy for fundamental technical analysis. Now, the MACD lines right over here, they're saying that they're going to cross, and it's a downward trend, meaning that the share price is expected to decrease even further when the market opens. And right now, the RSI value, it's currently in the middle. It's not overbought. It's not oversold. So right now, when would be the best time to buy this? As we could see here, this is the new support level for the share price. Once it hit $48.61, the share price bounced back up. And right here seems to be a resistance level right around where that SMA 180 line seems to cut in. And right now, the share price seems to fall even further. So not much can be determined here. But when these EMA lines cross, this EMA 9 crosses with the EMA 21 in a positive direction, that could be expected for a buy, as well as the MACD, and when it goes above this SMA 180 line. Once again, before I conclude the video, right now the stock NIO, it's in a dip. It's being sold for a cheaper price, short term, mid-term, long term. It's all showing bullish. Might be considered a well-bought buy. That concludes my video. Thank you so much for watching. If you like this video, please give it a like. If you found it very useful, please give a comment down below. be more than willing to take any advice. However, I'm not a financial advisor. Your decisions are made solely by you, and I'm not responsible for them. This video is made for entertainment purposes only. And thank you so much, guys, for watching. Have a great day. Hope all goes well for you, and peace out.